let's talk a little bit about how you get in early enough on these stocks that you can hold on to it for the big gain. What is it you're looking for?
Yeah, absolutely. I'd love to share how that kind of came to be, actually, because when I first started the system, and like many, I think, Bill said you have to buy the first stage base, and then, there's the second, and then the third or fourth may not be as successful. And I definitely, when I was buying back then, there was the fear factor because is this really going to work? I'm putting my real money on the line. And I would buy extended from first stage bases, or because I was like, well, is it really working? I don't know. And then I would buy it, and then it'd be overextended, and then it would pull back to the buy point like most of them do. And then I would end up, losing money all the way to the top because I keep buying and selling. And yeah. And so,
you see this big gainer that you lost money on.
Yeah, exactly. I didn't trust it. I didn't have the experience. And, it takes a long time. I know some people have likened learning, the system or investing just in general to a 4-year degree. And I definitely think that's probably what it took me. And actually, if I add up the time, I would say 2009 was the year I first really became successful. And then about 4 years later, around about where Bill O'Neill retired, and there was no longer any at level 4. And I was like, oh, man. Well, no level 4 with Bill O'Neill anyway. And Eve, shout out to my co-author, Eve, we went on our own little stock investing retreat. And we were just going to come up with things to study. And we carried all these books, all the big books from all level 4s in our suitcase.
Where did you carry it up to, like a top of a mountain or something?
No, we put them in a suitcase and put them on the plane, and we brought them with us to California. We went to California for like a little beach stock retreat kind of thing, and we didn't really have an agenda except we did bring Brent Steenbarger's book, one of his psychology books that focus on what you're good at and that kind of thing. So I remember one day we're sitting in the hotel room, and this is a great story, actually. It's not investing related, but just really quick. They messed up my hotel reservation. So we ended up with like a super duper 2-bedroom suite right on the beach because they messed up my reservation, something that I did not pay for, but got to enjoy thoroughly. And we're sitting there, and I'm just looking at charts. I don't know what I'm looking for. I'm just looking at them. And then finally it hit me. I got to buy these first stage bases, 4 or 5 years later after I've been doing the system. And then, I don't know, that's just when it came to me. And then I really, really started honing in on that. And then I guess in combination with when we decided to do the research for the IPO study, again, so important to get that first stage base. And for IPOs, when that due diligence phase, that institutional advance phase that I was talking about, and it, exactly what Bill's been talking about all these years that I have been going to his seminars. So how do I find it? I mean,
well, before we get into how I find it, so you had to change kind of the way you looked at the markets, or you almost had to change your habits and just the actions that you were taking. So did you write new rules to kind of overcome that fear of buying a first stage base? Because it was an obvious at that point, you didn't see it start working. And of course, you were losing money doing the other strategy, just kind of getting whipped around. Yeah, how did you change that? Because that's not easy to kind of change your habits once they're kind of ingrained in you.
Yeah, no, that's a great point, right? Because I was always buying the second and the third stage bases because, oh yeah, this one is a leader, but I should have known it was a leader at the first stage.
Now it's obvious.
Yeah, exactly. I was buying when it was obvious. And I guess, just looking at the charts there was nothing in my brain except I'm just looking at these, trying to see what I'm supposed to be seeing. And so in a way I was unfocused and my brain was clear. And it finally just like clicked. You know how like Bill told me all the rules I ever wanted to know at the first level 3 I went to in Chicago in like 2006 or 7 or whenever it was. And I go back and listen to that, and I'm like, oh, if I had applied every single thing he said at the level 3, I would have been there a lot faster. But it just doesn't click, right? Because there's just so much.
You have to kind of do it yourself a little bit.
Exactly. So it just, Arusha, I mean, yeah, I'm sure I wrote it down. I have most of my rules written down in some form or fashion, but it just like the light bulb went off, and it's like, oh, duh, and if it doesn't work, you just sell it.
Right.
But it seems like, I don't want to say they're sure things, because nothing's a sure thing, but maybe it's not a sure thing.
Odds. It puts the odds in your favor.
It puts the odds in your favor, and it might just be a 20%, but it definitely could be more, and it's totally worth it when you find those first stage bases. So it's worth looking for and being patient and not chasing,
Well, and as you mentioned, it only takes a few of those that you're right on and that you really handle well to have kind of that big change in your portfolio. So let's get back to it. What is it? What is it that you came up with? What were the epiphanies? Do we all have to get 2-bedroom suites on the beach in order to become better investors? Because if that's what you're saying, I think I'm okay with this. Arusha, do you want to have a retreat?
I've already reserved one, Justin. So we're
perfect. So tell us what you came up with and what kind of rules you started using after that retreat.
Well, it can be, you definitely need some type of bottom in place, right? And we can let's look at one that makes it easier. So like Twilio,
Sure.
Twilio was the big winner for me. And this is a recent IPO. Well, not as recent now. But
so you're talking about Twilio back like in 2018.
Exactly.
There, that first kind of base. So in 2016, it went on this big run, came out of an IPO base, corrected, and went through the due diligence phase, and then started setting up. MarketSmith started picking up the pattern there, and so that was where you really started going for it.
Right. So the first thing that I'm looking for on a recent IPO is the 40-week line. When the 40-week line first starts to appear on the chart, that's when I'm like really taking notice, because now I know there's a minimum amount of time. What I accept as a minimum amount of time that this IPO has been out, where the potential now has changed, where it could start building that first mature base, and then hopefully have a good run after that. Now in this case, it took quite a while. That's a pretty long due diligence phase. And you can see it when it first came up around that 40-week line, a little bit more to the left. Yeah, right there where it was real tight around there. I thought that was going to be the first mature base.
Okay.
And I did try it in there, but it didn't work. It failed, went back below. And then that gap up bar was on, I believe, earnings, if I recall.
Right.
And that's when I was buying it, trying it again. Right now it's back above that 40-week line. And what I found is, especially on these bottoms, it's usually an earnings catalyst. Like there's going to be a gap up, then a base, or there's going to be a base and then a gap up. And that's usually the start of it. And in this case, it was the gap up within that base, and then soon thereafter continued on.
So let's go back to the first time where you tried it, where it came above the 40-week line. So maybe like in July of 2017, that's where you were entering it. When did you cut your losses? Was it?
I was actually. Let me interrupt you, just because I was actually probably entering it. I'm trying to point at the screen. No one knows what I'm pointing at. To the right, a little more to the right, where it was tight, and then it popped up from that tight action.
Okay, nice 3 weeks tight.
Yeah.
Exactly, because see, in the first point, it was still just having
October
a prior run up.
2017.
Yeah, it was a prior run up into that 40-week line, and then it was tight around that 40-week line. And then when it popped up from that, that's where I was trying some initial small positions.
Okay.
And then that failed soon thereafter.
Okay. And so then in November of 2017, that's where you're cutting your losses. Now, do you wait till the end? Did you wait till the end of the week to see if it could recover back above the 40-week line, or it was like during the middle of the week you had a percentage just kind of stop to force you out?
Yeah, my longer term sell rules are more of a wait till Friday. Shorter term, if it looks like a clear reversal, I'm out.
Okay.
Yeah.
It's very different when you have a big cushion on something. You can give it that room, that patience, but when you're just starting, you don't want to necessarily, let's just wait for a little bit longer and see what happens, because they can kind of come down real quick.
Right, exactly.
So yeah, fast forward, and it really kind of hovered at a level just around 26 for a number of weeks. So a lot of congestion right around there, and then that pop that you mentioned. And so, first of all, I think you have to be commended, because one of the things that happens with some people is once they try something and it doesn't work, they're like, forget it, I'm never trying you again. You burned me once, type thing. But
Right.
you said, okay, there's an earnings report out, it's being revalued, and people are looking at this differently, and you said, I'm going to give this another shot.
Exactly. And with Twilio too, this is a great stock to talk about, because in its IPO advance phase, it also went up 100% within 90 days. So we usually in the book, we put those in a different category that we call a rare jewel, because those have the potential to gain 500% or more in their lifetime, which in this case, Twilio did do. So it was also on like a special list
Right.
to keep watching it.
But that's kind of after the fact you put it into that separate group. So is there anything else like in the early phase? I mean, this was something that had been down quite a bit. I mean, if you hover over the base, it says that the base is 33%, but I mean, it had already suffered a lot of destruction from 80 down to the top of that base, so it was already down 50%. So is there anything in terms of, hey, this is too much, or it has to make a certain amount of recovery before you're getting interested in it? That whole difference between buying something kind of at the bottom versus, hey, this has proven itself. What was it about Twilio that kind of put it into this isn't bottom fishing, this is something that's, shown something different?
Well, because it had several years of sideways action, I don't consider it a bottom anymore. Maybe, we could call it a bottoming base. I don't know if that's how you officially define it. If it was just a bottom, like if you go to the far left when it, kind of started to go sideways, like that would be like a bottom I would not buy. I would want, some sideways action, unless it somehow formed a really good base there, but that's not likely. I don't usually see that happen. But I do observe, Justin, I mean, you said 30 odd percent, a lot of them are pretty deep sometimes in that first base, especially when you're coming out of, bear market. And Bill has said that we have that in our rules, that bear market bases can be much deeper than the actual market. Right. But that doesn't bother me because of knowing that reason and what it's come out of. And sometimes they can be really ugly. I think FVRR was another good example of that. You don't have to pull it up, but I mean, it had some tight, and then it had a really ugly, like shakeout base, and then it moved on. So that's, to me, that's common and it's expected, and it doesn't bother me.
Okay, so now you're in the position. Are you adding to the position, or you get kind of your initial position, now you're really letting it ride until the second stage base? How do you approach it after kind of getting that good entry?
Yeah, so I get the initial position in, hopefully at that first stage base. And then I'm looking for secondary opportunities to get to a second full position. And so since in this case, we're not even at the turbulence zone yet. So if I can start adding at, maybe the bounce of the 10-week like this one did, or other little tight consolidations, I'm adding along the way. But essentially, I want to have my second full position in either before or finished at that second stage base, which can occur at that turbulence zone area, or right below or right above, which is the prior high of the initial run from the IPO. And then at that point, then I'm done. I don't add after that, because then I just want to be able, because we already know the third stage base and the fourth stage base, things are going to get more volatile. And at that point, hopefully I've had 100% gain, and now I'm just about riding that 40-week line and ensuring a 50% gain retention.
Okay.
And go ahead. Oh, go ahead. No, you finish first.
well, because now you put Twilio or Twilio qualified for that other tier, right, where it has even more potential. So how does that adjust the rules in this case here after the second stage base? Are you using the 40-week line and exiting when it's back in 2019, or are you trying to ride through that base because you have such a big cushion on it?
Yeah, no, when it broke there where you have that last little red hash mark, I believe that's where the 50% and the 40-week line, they both kind of came together at the same point. And I don't know if it's a coincidence. I haven't done the math, but it always seems to happen around the same time frame. So I was out of it at that point. I don't adjust my position just because it's a rare jewel. It's all positions are the same no matter the stock that I'm going to commit my money to. And that's another, I'm just always want to make sure I give credit to William O'Neill. And I think I learned that at the level 3, where it's like, you know, any stock that you're going to put money in should have the same position or you shouldn't be buying it.
That's a good point.
And just, you know, because you've referred to it a couple times, you referred to the MCP, just remind people of what that rule is for you.
Yeah, so Eric Kroll, my other co-author, you know, he actually developed that idea where, you know, we need to preserve our mental capital. And it was actually, I think, Jesse Livermore that really talked about it a lot in his book. And so he was able to actually put some numbers to it where, you know, if you have so much of a gain and you come back this much percent, you know, how much gain are you, how much are you retaining of your gains? And so he did all the way from, you know, 10 to like, you know, 100, right? Which 100% of your gains, you'd have to hit the top tick, right? So that would be very challenging. But he said 50% should be a good baseline. And if we can do that, then mentally we can survive. And I don't know if that's the best way to say it, but that's kind of how I think about it. It's like, oh, well, I don't need to worry about this because, but again, you have, for me, and I think it really works best, you have to have at least 100% gain or more. You really can't apply it on just a 20% gain. That's not going to work. I mean, I can show you the math, right? But when you have 100%, if you're willing to hold through a 20 to 30% base, then that's well within, you know, and I don't have the chart in front of me, so I can't tell you exactly, but holding for 50% of your gains is really mentally not an issue from that perspective. And then when I've added the 40-week line to it as well, because I'm pretty confident I've got a true market leader in most cases, it doesn't faze me. So it's just a way to, I guess, put your brain at like relaxation mode during corrections.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.